What's up guys, Jay Graff back at it again with another investing video. In today's video we're going to talk about my Robinhood and M1 Finance portfolios. I've made a lot of different changes to these portfolios and I've bought a lot of different stocks and I'm really excited to share that with you guys. But before we get started, I'd like to hit you all with a quote. Lil Uzi Vert once said, "Y'all don't hear me, better listen, stand on my money, I'm tall as Pippin." In this quote, he was referring to Scottie Pippen. Scottie Pippen is 6'8", so he is saying that he has so much money that when he stands on it, he gets significantly taller. So enough with the rap lyrics. We'll go ahead and jump on into my video. Let's get it. Alright guys, so here we are in my Robinhood portfolio, and like I said, I have a lot to cover today because my strategy has changed significantly. So kind of with all the variation that's gone on in the markets and all the price fluctuations, I've really kind of thought, man, it is very difficult to pick out stocks to invest in. So I've kind of switched to more of a ETF strategy. So what I've been doing lately is I've been trying to invest $100 every week, and what I've been buying is VTI, which is the Vanguard Total Stock Market ETF. VTI is comprised of US companies. It provides pretty good exposure to both large cap, mid cap, and small cap stocks, so I really like it. So every week I've been putting 70 of my $100 into VTI. The next thing I've started to invest in is VXUS. Now this is the pretty much the same ETF, but it tracks international stocks. So this gives me some international exposure, which I like. And every week I've been putting in $20 into VXUS. The last thing I've been buying is BND, which is the Vanguard Bond ETF. Every week I've been putting $10 into this bond ETF. I like it because it provides me a little bit of a safety net if the stock market was to drop quite a bit. So I kind of adopted this strategy, like I said, because it's hard for me to do research on stocks and really spend the time that I want to be able to pick out stocks that really reflect what I want as an investor. So I decided to go with these ETFs. It's a good way to be diversified, and it kind of takes the stress out of investing. You know, I could go out and buy some shares of Carnival Cruise Lines and you know, it'd be something that would almost keep me up late at night because I'd be like, ooh, is this going to drop in value tomorrow? Are we going to have some big news? Should I have sold Carnival Cruise Lines? And, you know, I just don't really like that. So I'm sticking mostly with ETFs. I am going to continue to buy individual stocks here and there. But I think the bulk of my money is going to go into VTI and VXUS. Now, as opportunities come up and I do see something that I really like, I will probably still invest in these individual stocks. An example is Apple. I went ahead and invested $500 in Apple. I really like Apple as a company. I sold my shares a while back, and I had the opportunity to buy them back for a lower price. So I thought, you know what, this is a good opportunity to get a company I love. So I went ahead and picked up some shares. I also bought $500 of Microsoft stock. I did some research on Microsoft for one of my stock market analysis videos. I'll provide a link to those in the description. And I really liked what I saw with Microsoft, and I thought it would be a good play during everything that's going on right now because they have all this Microsoft Office software, and they have Teams, which I think is a really cool app to use. And I just really like where Microsoft's headed, so I decided to pick up some shares in Microsoft. So enough with that, we'll go ahead and look at how this portfolio has been performing. So the past trading day, I was up almost 1%. Over this past week, I'm up 1.5%. This past month, I'm up about 3.7%. In the past 3 months, still down pretty big, down about 21.8%. The past year, I'm down 11.9%, and all time, I'm down about 3.86%. So I'll be the first to admit to you all, I probably made a mistake over the past month or so. So right around the time that the market was dropping, it hit a point where I was like, you know what, I should really probably sell. I really thought that I should try to sell everything and buy it back later at a lower price. I just kind of thought that things would just continue to go down. All this news that I was hearing was very negative. And looking back on it, I've always told myself, you know, be greedy when others are fearful, and be fearful when others were greedy. So in this case, people were being fearful. I should have been greedy. Instead, I was fearful, and I sold a lot of my positions. To kind of put that in perspective, I started selling everything when the Standard & Poor's 500 hit about 250, because I just thought it was going to drop further and further. There were a few things that I bought back in when the market was still down pretty low, but since then the market has jumped back up, and really I'd be in a better position right now if I had just held on to everything and continued to invest despite what was going on. So hopefully you all can learn from my mistakes. It's very difficult to be able to time the market, and I think what I had was not necessarily a bad idea. I was trying to prevent losing a lot of money, but really I should have been buying more at that time. I shouldn't have been selling everything off. I got scared, and that's why I did it. So like I said, hopefully you all can learn from that. But overall, I'm pretty happy with where my portfolio is at right now. I picked up a couple stocks that have had some really nice returns for me. Kraft Heinz is one that has shocked me. I'm up almost 30% on that. Kraft Heinz was a company that had been doing very poorly over the past 5 years, down from close to $100 all the way down to they're at $29 right now. But it looks like I bought in at a good time, because I am up 30% on them. Johnson & Johnson has also done pretty nicely for me, up 20% on that. Apple and Microsoft, I'm doing decent on. I bought them last week, and I'm already up 6% on Apple and over 7% on Microsoft. So pretty happy with that. About the only stock that I bought recently that has lost me money is Realty Income. I do really like Realty Income, and I may try to pick up some more shares of them. I'd have to do some more research. Coca-Cola has done well for me. Procter & Gamble has also done well for me. And Waste Management is another stock that I love, I would love to continue to pick up shares of. Another thing that I kind of like about this portfolio and what I'm doing is I don't have 30, 40 positions anymore. That's really difficult for me to manage. It's really hard to keep track of how all these companies are doing, looking at their earnings reports, looking at their earnings projections. So I'm glad that I cut my portfolio down to about, it looks like 10 to 15 positions. And I'd like to kind of keep it like that in the future. I think I can diversify myself by investing in these three ETFs I talked about earlier: the Vanguard Total Stock Market for the U.S., the International ETF to get some international exposure, and the Bond ETF. So with that, I think I'm going to go ahead and jump on into my M1 Finance portfolio. I have some big changes for that, and I am excited to show you all them. So here we are in my M1 Finance portfolio, and like I said, I made some huge changes to this portfolio. So last update, I had 100 different stocks in this portfolio. Each represented 1% of my entire portfolio, and that was getting to be a little too much to handle. I talked about in Robinhood how it was hard to manage 30 to 40 positions, so it was even harder to manage 100 different positions. So what I did is I went ahead and I looked up all these sectors in the Standard & Poor's 500, and I think there's 11 or 12 different sectors, if I remember correctly. Maybe a few more, maybe a few less. And what I did is I picked out my 3 favorite companies in each sector. So this gave me a total of about 33 stocks, maybe 34 stocks, I believe. 33 stocks. It was definitely 33 stocks. And the reason I like doing this is it gives me some diversity. Obviously, I have my money invested more or less equally in each of these sectors. And then I also have my money spread out across a few different companies in each of these sectors. So I think it definitely gives me some diversity. So we can go through these real quick. I won't spend too much time on it, but we'll go through real quick and I'll show you all what I am going to be invested in. So ExxonMobil, Bank of America, Sherwin-Williams, Realty Income, Digital Realty Trust, Visa, Air Products and Chemicals, McDonald's, Pfizer, Procter & Gamble, Coca-Cola, Johnson & Johnson, Verizon, 3M, American Tower, American Express, Kinder Morgan, DuPont, Brookfield Renewable Partners, Home Depot, Nike, Union Pacific, NextEra Energy, American Water Works, Duke Energy, Berkshire Hathaway, Google or Alphabet, UPS, Abbott Laboratories, Walmart, Activision Blizzard, Apple, and United Health Group. So, like I said, this is going to be a whole lot easier for me to manage. And with that, I'll show you all some of the dividends I've received, and then we'll take a look at how this portfolio has been performing. So over the past, 10 days or so, I did receive dividends from the old stocks that I held. So I got 8 cents from Cincinnati Financial Corp, 4 cents from Ecolab, about 4 cents from Interplus, 12 cents from Federal Realty Investment Trust, 9 cents from Illinois Tool Works, 14 cents from Leggett & Platt, 8 cents from Main Street Capital Corporation, 5 cents from Realty Income, 7 cents from Stag Industrial, 7 cents from Pembina Pipeline, and 8 cents from Medtronic. So as we move forward, we will start to see the dividends solely from the companies that I am invested in now. And these dividend payments should be a bit larger because now instead of having my money spread out through 100 different companies, I will have it spread out across 33. So I talked about this when I started this portfolio, but I love seeing dividends. I love reinvesting the dividends, which is why I picked a portfolio with 100 different companies, because I just see dividend after dividend coming in, and I love to see that. I think cutting it down to 33 companies, I'll still see lots of dividends, and I'll love to see that, but it'll be a little bit easier to manage. I think at some point in the future, I'll eventually want to cut this down to maybe 20 companies. But for now, I'm going to keep the portfolio like this, continue to add to it. I set up the auto reinvest, so now I will be investing $33 every Thursday, I believe, into this portfolio. It's easy, it's simple, I don't even have to think about it. It just goes ahead and takes the money out of my account and buys about $1 of each stock. So pretty excited about my new plans for this M1 Finance portfolio. I think it's going to be a lot easier for me. So looking at how this portfolio has done recently, in the past day, I'm up about 2.8%. Over the past week, I'm up 2.2%. Over the past month, I'm up 9.4%. Over the past quarter, I'm down 19.1%. And over the past year, which is going to be the same as my all-time return, I am down 23%. So I'm okay with this. I'm going to keep adding money, keep buying these companies at these lower prices, and I really do think that this is going to turn out to be a great portfolio for me. So as a reward for watching to the end of the video, I will show you all why I have my hat on. So I got creative and decided I would try to cut my own hair. Advice for any of you all who are thinking about doing that, cutting your own hair, don't do it. You're going to end up with something like this. Pretty close to bald now, but so that is something I will probably not do again in the future. But I wanted to thank you all for watching. If you enjoyed the video, please hit the like button. Please subscribe to the channel. Also, keep an eye out for my videos, because I am doing stock analysis on every single company in the Standard & Poor's 500. It's a series of videos that I'm really excited about, and like I said, I'll leave a link to those videos in the description. Thank you all for watching, and JGraph out.